Welcome to the Mortgage Broker Podcast, tailor-made for Canadian mortgage industry professionals. Proudly presented by A Better Way Mortgage Group, this podcast is your trusted source for insider insights, market updates, and strategies to elevate your career in the ever-evolving world of mortgage brokering. Whether you're a seasoned broker with A Better Way Mortgage Group or an industry enthusiast looking to stay ahead, our episodes are designed to empower you with the knowledge and tools you need to excel in the Canadian mortgage space. All right, welcome to the Mortgage Broker Podcast. I'm Dean Lawton here with my co-host Jason Marshall, and we're continuing on with our Behind the Lender series. It's one of our favorite series. It gives us a chance to, really get to the behind the scenes stuff from some of our best partners in the industry and really the best lenders, in our opinion, in the industry. And I'm really excited about this one. 3 Point Capital is a lender that our brokers at A Better Way have come to trust, immensely, and especially in the private and mixed space. I've got two guests joining me here today. Brad Graham, Chief Credit Officer and Principal Broker, also one of the owners of 3 Point Capital, and Loren Hawkins, Director of Broker Relations for Western Canada. Guys, welcome to the show. I want to do a brief introduction to each of you. You guys both have, incredible careers in the industry. And, maybe Brad, I'll start with yourself. And maybe you can just give us a bit of a background. I know you spent quite a bit of time at the bank, I believe on the commercial side before entering the private lending world. And, maybe you can kind of just start there and, what made you make that jump?
Thanks, Dean. The jump, to tell you the truth, wasn't that easy. I spent 19 years with TD Bank, majority of it in the commercial banking division all across Western Canada. My last stop with the bank was in Kelowna, where I was fortunate enough to be the commercial lender for two different MICs, of which this was one of them. So ultimately, back in 2009, one conversation led to another, and I ended up being part of, at that time, we were referred to as Paradigm Mortgage, but I was part of their succession plan as they moved forward. And I'm happy to say that I just surpassed 17 years here. So if you add all of that together, that would come up to saying that I'm getting pretty old. So 36 years in the financial industry altogether. So
I'll vouch for the old part.
That's obviously a big leap, but the one piece I would see is it would have brought some pretty incredible background credibility to, the credit and underwriting side of things, which, you still lead. And, maybe how did that experience help you not only in the transition, but where 3 Point is today?
As much as I will use the term painful, if everybody remembers what sort of began in 2009 into 10 and 11, I probably jumped ship at the exact wrong time. At least that's how some people would look at it. And to be honest with you, though, I would look at it as I probably jumped in at the right time. Because, it's widely known Paradigm Mortgage had its struggles back then with, same as a lot of other MICs. They were involved in projects and developments that failed and had to move on. And we put together a great team between sort of 2010 and 2015, where we worked our way through a lot of those problems. We chose never to bury our head in the sand. We hit the problems head on. We were fully transparent with our investor group. And at the end of the day, we stripped Paradigm down to basically the bones. And that was sort of the beginning of 3 Point Capital. So 3 Point Capital came to fruition technically on June 30th, 2017. So almost 9 years ago from that point of view, but still the same ownership, still the same management. But we came head on into basically a new MIC with new lending guidelines, new standards, and complete control from the current management team. I'm proud to say that a lot of those risk management practices I was able to bring over from the bank continue to flow into how we operate this mortgage fund today. And it's also a huge benefit to us with our relationship with our existing bankers, which are both TD Bank and RBC from a syndication point of view. So 2015, 16, dark days, 17 onward, it's been very, very fun ride to watch this company grow to where we are today.
Did you guys always have kind of the same vision for how this was going to shape itself out over the years, or did you have to pivot quite a bit as you're kind of going through some of those turbulent times? Like, I kind of think about, how often, we talk about people leaving a bank side and coming to this side and feeling that kind of heat and that pinch and saying, Jesus, like, why did I do this? Like, I should go back to what I was doing. But if you stay kind of focused on the vision that you had, is that something that you guys always had in the back of your mind about where you wanted to go and take this thing?
Number one, good question. I'll never lie to anybody. I would suggest that behind the scenes, my wife and I had some very hard conversations back in 2015, 16. And, there was parts of me, do I jump back to the bank? Did I make the right decision? We still, our kids were coming into high school at that time, wanting to protect your family. But at the end of the day, it was sort of right in the middle of that we brought Ryan Lee into play, which he didn't bring any of the mortgage experience with him, but he brought a whole lot of other items to the table that really helped convince us to, let's dig in, let's refocus, and let's build a mortgage fund that we're going to be proud of and run it basically completely different than the old one was run, which has been the best decision any of us ever made. I would suggest if you ask any of the three main partners that work here full time, and we still have one partner that's very much just sliding out into retirement, but we're very proud of where we are today, and it hasn't come without a lot of hard work and focus and determination, and the staff that we have put around it. It's amazing. So
I can say just from experience from the outside, like you guys look like you're having a good time, and it's a good segue to Loren. Like we've gotten to know you, back from your credit union days when I was just a new broker at A Better Way, and we were listening to you do lender presentations in that dungeon boardroom and at A Better Way's Surrey office. That's where I first met you. And I mean, you came from the credit union world, I believe 22 years. Maybe you can kind of just talk to, what your journey looked like, because I believe you spent some time as a broker as well.
First off, guys, thanks for having us on here. Pleasure to sit down and have a chat. I started my career. I'm from Victoria originally. I started back in 93 in the credit union system. I started off as, your typical teller part-time and kind of worked my way up to the bulk of my career with that credit union, which is now formed Coast Capital. I was a retail lender, account manager, we were called back there. So I got to learn a little bit about the whole entire flow of the financial world, right from the teller up to learn how to do a mortgage and that gave me a solid foundation, kind of move my career on. And then from there, I was with them for just over a decade and had the opportunity to move on to a small credit union based up in Prince Rupert called Northern Savings. For those that are listening, we were in the broker space for a while there, and it was a new kind of concept. They were needing to deploy a bunch of capital. With our merger, we lost a couple of VPs. They formed some consulting businesses and say, hey, listen, I think you should look at the broker channel and sort of deploy some of your funds that way. So the credit union actually created a whole subsidiary and that formed a portion that I worked at, and we were called the Mortgage Investment Group. We served the broker channel. And that was my first really forte into the broker world. And I said, hey, this is quite exciting. That's what brought me to Kelowna. We needed to expand. We grew exponentially over the first year, and we needed to diversify where our lending portfolio was. And so the Okanagan was a perfect spot. We had a couple brokers up here that we were dealing with now. Shortly after, but I was here about a year and a half, and then I had what everybody knows as First West now, and they came knocking on my door looking to grow their broker channel and go in a different direction. And it was a good fit for me. I already knew everybody in this neck of the woods, and I transitioned over to running their broker division for, again, just over a decade. And that's where I got to kind of grow broker relation base, because at that point I was just looking at Valley First in the Okanagan. And then when we became First West, I kind of moved over to sort of the parent company and looked after all brands. So at that point it was Envision, and then we had Island Savings come on as well. And then I had some moment where, hey, I wouldn't mind going back to where I started everything and helping BC, consumers in the mortgage space. So I had the opportunity to partner with one of our top brokers at the time when I was at the credit union. And then I ended up spending about 4 years, 4.5 years there. While I was at the credit union, that's where I got to know Brad quite well. And we started doing some synergy before, and it basically formed a great partnership, friendship, more or less. And then when we became 3 Point and we were looking to grow our business and expand out east, this is when conversations started having, and it was just a natural fit to really join friends to go to work with every day. Not that I didn't enjoy brokering, but this really became my niche per se. So I've been around for a while, and the broker side's just a great part of the industry.
I think you and I met just a brief stint on one of the education boards. And one thing I found with yourself is, you've seen this industry from a bunch of different lenses. And, the support and the knowledge that I saw you pass down to brokers and how much you actually cared about this industry and about the business, I truly believe that kind of sets you at, a much different level than a lot that operate here. And I think, having the ability to see, this business from a bunch of different lenses allows you to give more of a kind of holistic landscape to the broker market in general. That's that's one thing that I got to know about you, which I really appreciated. You've always been kind of someone that, I've been able to go to and bounce a lot of things off of. So yeah, it's pretty incredible.
I think just your experience in general, it speaks to why you're so good to deal with on the broker side is you understand both sides of it, especially, the recent transition going back to brokering there before joining 3 Point. You know exactly what a broker needs from, expectations when it comes to communication and just how to handle a broker relationship. I think is very important. And it's kind of crazy. We always talk the level of what we expect a typical business development manager, these types of roles, what we expect from is usually very minimal because it's just not very great when you look at the rest of the industry from a communication perspective. Just answer your phone. It's funny and it's not funny at the same time, but you go way beyond that. And the fact that you actually understand their business, I think speaks a lot to, why you guys had some success and, why you're so busy. And it kind of leads me to I just want to go back a bit to Brad. I mean, your history obviously, directly involves the 3 Point history. And you mentioned you originally Paradigm Mortgage Investment Corporation and then rebranded to 3 Point. Maybe we can just touch on you're headquartered in Kelowna. You serve BC, but you also serve other parts of Canada. So we can maybe just tell our audience where 3 Point plays.
Ultimately, we play in BC, homegrown, bred. Except for me, I'm born in Saskatoon, so proudly Saskatchewanite. We also lend in Alberta and Ontario. Ontario was our last big step. We went in there in late 2018, and that's when we realized, speaking about Loren's history and so forth, but we didn't have any BDMs ever in this company, right, in our history. And so I was trying to, which my sales hat is terrible, but I was trying to sort of be the be all to end all, doing the events and trying to get out there. And, once we stretched into Ontario, we knew that we definitely needed help. And that's when Loren came along, which was huge for us and instrumental in us gaining a really good foothold in the Ontario market. And to the point of, a year ago, we're lucky enough to hire Justin Terrio as our BDM in Ontario just because of the quantum of business we were getting. Poor Loren, we were running him into the ground with all of his travel across the country. And in all honesty, we needed Loren to refocus on BC and Alberta and let Justin do what he does best in the Ontario market. So those steps have been great for us. There was a point in time where we did lend Saskatchewan and Manitoba, but those were just relatively short-lived for a lot of different reasons. We just backed away, smaller markets, not a lot there for us, expensive to try to do business and so forth. So we're concentrating on what we see as the three main economic drivers of this country. And it's been fun.
Yeah, very aligned, with us as well. Those are the three provinces that we solely operate in and share the same beliefs there. For most of our listeners, they would understand what, a MIC is, and a brief explanation for maybe those who don't. Mortgage Investment Corporation is essentially your model. It pools investors' funds into a diversified portfolio, typically of either residential or commercial mortgages. And in your case, my understanding is it's primarily residential mortgages. And maybe we can just touch on that and just exactly what that structure looks like for somebody that's maybe not currently aware.
Well, I actually get bugged about the residential only side. For the brokers that have known me for a long time, or a lot of people that have known me, I mean, my whole background is commercial lending. And I am the biggest advocate against commercial lending within a mortgage investment corporation. So after what we went through with Paradigm, and, again, not to belittle, but we all got touched with some different development properties that didn't go well. And, we talked about one before we started recording this for another entity, but we wanted to refocus on residential only. We really truly listened to our investor pool that did stick with us through the reorganization. We are so grateful for our core investors that did choose to stick with us through that. But because of them, we learned that we needed to take a step back and figure out who we want to be as a mortgage fund, because none of us in this country operate the same. None of us have the same appetite. We all have our different niches. So we chose to just focus solely on residential type properties. And when I say that, I mean, it's just the cookie cutter stuff. It may sound boring to some people. Trust me, it's not. We're building up a very good mortgage fund with high quality properties. We do still touch on some single family construction, but again, conservatively, but we do have a good, construction program. But the one items we don't touch are commercial type properties. We don't lend on development type land, those types of items. We've done, I think, a very good job of becoming very good at a very focused market. And we pride ourselves on, as much as we can't do the big $3 or $4 million mortgages, that's not what we want to do anyway. I would rather have a diversified portfolio over a whole bunch of different properties, because I think we're all getting touched with some, delinquencies right now. But you learn in a hurry how well your underwriting model and risk management model is when you start having those delinquencies, because we've been very successfully exiting properties where we need to. We just had our AGM, I don't know, 6 weeks ago, 8 weeks ago. Our losses for the last fiscal period were, I think, minimal. Like, I think they were under $50,000. And, that's not bad for a $270 million mortgage fund.
Yeah.
We are proud to say that we're conservative. Sometimes Loren and Justin on the sales side would try to argue with me on that side, but at the end of the day, we're doing this in the best interest of our shareholders, and we're proud of that. I mean, our average mortgage size in our whole book is $550,000, and our average loan to value is 55%.
Wow. That's incredible. I'm glad you mentioned that, just like the push and pull that you would have with the sales team on, what you're seeing in the communities that you lend in. And maybe it's a question for both of you to answer maybe in different ways, is like, we mentioned that you lend in BC, Alberta, and Ontario. One, how do you decide which communities you will lend in? And then looking at like locations, marketable urban locations are, with high stability is obviously the stuff you're going to want. But like, where does the lending actual locations within those provinces come into play? And, you mentioned conservative approaches around loan to values, first position, second position. Like, where do those decisions come into play? And, how do you balance like what Loren's seeing is a need on the ground versus what, you actually have the appetite to do?
Probably the biggest item I instill on our underwriting team is the art versus the science. And that almost comes into play with locations. I will argue that BC and Ontario are extremely different when it comes to locations, especially, if you're trying to compare that southwestern part of Ontario, and I mean from Toronto all the way to Windsor through that whole 401 corridor. There's communities in there that people say, well, they're just small communities. But if you drive through that territory, it is just continuous populations, right? I know Loren will always argue with me, which I expect him to, but I look at some of those smaller locations in Ontario differently than I would look at a smaller, I don't want to beat up any community, but I would look at, Terrace different than Port Colborne in Ontario, right? Like for me, it's always how do you get out of a property? What's the marketability? And that's where the art comes in. If you ask me, for some reason, I've never lived there. I have a soft spot for that whole Vancouver Island from Nanaimo all the way up to Campbell River. You can ask Loren, there's pretty much not a file I won't do in that area just because I love it so much, right? And, maybe that's not fair to the Kootenays, but I would rather live on Vancouver Island than some other locations. So Ontario and BC, they're very different in which we lend. And I would say Alberta is more similar to BC. We like to, hone in on areas that are marketable, towns that houses sell in. You don't want to look up MLS stats and figure out only 2 houses sold there in the last 8 months. Because, that's how you get out of properties when you do have trouble. So it's not easy, Dean. There isn't a great answer. We try to build a lending location list, and trust me, there's exceptions to every rule. So
I think I could sort of echo on sort of the, when we look at a file, we really kind of also rely on the information that the broker provides our team, but it's also the relationship that they have with the client and knowing the file and that ability to help us determine whether the exit strategy is going to be solid enough for us to maybe take a risk on a smaller community that we might not necessarily consider on a day-to-day because of the strength of the file and the broker's knowledge on, hey, these 3 steps need to be done and I've got X as the next lender. The exit strategy is there. So it gives us comfort in making maybe the harder decisions on some of the smaller locations. And obviously a lower loan to value definitely helps that aspect of making those decisions for our team, right? So,
Loren, is there a lot of coaching that you have to do with brokers in terms of how they're packaging their deals or how they're selling that the position that they're going to take? Like, are you out really teaching these guys how to construct and package it correctly to send them to you guys, or do you find that the brokers are generally pretty sound in doing that?
That's a loaded question there, Jace. Yeah, generally that's what I'm doing. I can't emphasize to our broker partners, if you've got questions, that's what I'm here for. I'm willing to help you as much as you kind of want to be helped. If you take some advice and listen to what I have to say and how to do that, it's going to make your life so much easier. So I'm always an advocate of educating our brokers on, what's a deal look like? How is it going to come into us? Especially what the note aspects are going to be. I can't emphasize enough with them. You're coming to us for a specific reason. That A or that B lender is just not quite ready to accept that file. So what do we have to do to help get you there? And the key is obviously there's always going to be some, what we call in the industry, hair on the file, right? Let us know what that is up front. Don't hide it, because on every file, we're going to find the truth on it if we have to dig further. So I kind of always emphasize with our partners, listen, this is how you need to structure the notes and highlight these specific areas so we can get those out of the way, because the rest of it obviously is going to be great if we're only missing a couple points to get it to that next level, that A and that B. So I kind of pride myself on kind of bringing that aspect to the brokers, how to get that deal across the line.
Well, I really appreciate you saying that. Like, I do find a lot of the time that brokers really underutilize the BDM and really working with them to actually teach them and coach them on how to do that. And the good BDMs like yourself, they're the ones that are actually in kind of the meat of all this and really telling you how to construct and how to craft these deals. So I appreciate you making those comments, because I do think they're underutilized from a BDM standpoint.
Yeah. I mean, when I'm talking to our partners out there, I can't emphasize enough to them, like, I'm old school, right? Use the phone. Let's just have that conversation more and more now, that I'm more focused back on the West Coast. If file comes in, I will pick up the phone first before I hit, reply to an email. And let's just have that conversation, because a 10-minute conversation is much better than jumping back and forth between emails for an hour. We can kind of go through, I can ask some questions and really kind of pull that out of the broker and then help them structure the file.
I want to touch on some of the products, because I feel there's some differentiators here. And Brad, you mentioned like every private lender MIC we have, there are a lot of differences and they're not all doing the same, product or programs. And Loren, maybe you could walk us through the lending programs, because I know there's a number of differences here.
We're actually just about to launch an update to our product suite. So for us, I always get the questions of what's your niche? What's your niche? And I always fall back to, we don't have a massive product suite like some of our colleagues out in the industry, meaning, purchase program, a refi, purchase plus improvement, all that kind of stuff. For us, we focus on the way we package our rates and our fee structure. Under that, you just let us know, hey, I need to do a purchase here. I need to do an inter alia year, bridge short term, whatever that case may be. And it fits within that lending program, right? So for us, we've got our original, which is our Pathfinder program. That's your straight up 1-year term, fully open from day of advance with our option 1 and 2. So under a Pathfinder, we offer 3 options: option 1, 2, and 3. Option 1 is always going to be a rate and a 2% lender fee, a 1% lender fee in option 2. And then we have a no lender fee option, which is our close for the first 6 months and then open from there. And like I said, the brokers have said that option is open. We don't have any clauses if they, get their credit up and they need to move on type of thing. It's there. It just gives that broker and the client the ability to select a program that best suits them. Under Pathfinder, the broker selects their own fee. That's our tried and true. Right now, our option up to 60%, or we're $575 and a 2% lender fee. And then on the high side, up to 75, we're $695 and 2. You just kind of increase the rate, lower the fee as you kind of go through the options. So a lot of flexibility there. Last year, we brought in our Elevation program, which was a fee split model for our clients. So meaning we're now paying brokers on deals coming in. Elevation, what we call now our Elevation Balanced, it's a 50-50. So our lender fee is a 3% split, 50-50, paying the broker $1.50, which for us, and to my knowledge, one of the highest comps out there in our industry to our broker partners, although still keeping aligned with our lending guidelines towards our investors on that. And again, from there up to a 60, where we start at 625 and go up to 745. So some flexibility in there. One of the new programs we're launching is our weighted under our Elevation, which brings down the rate a little bit, and then the same lender fee, but it's a different split. It's a split of 2 to us and 1 to the broker. And the reason we brought that in is we had a lot of brokers out there saying, listen, I don't need 1.5 points. Can we reduce the rate for the client on this aspect? And so we took that to heart and we made those adjustments. So there are, some situations where, the balance works, and there's some situations now the new weighted program work on that. Again, that program fully open from day of advance, so gives that flexibility to the client. If you need a 30-day or you need a 74-day, you've got that flexibility in there. The other program that we're really excited is our Horizon program, which again, taking feedback from our partners, looking for a closed program. So Horizon now is a closed option for the client. It starts at up to 60 mark at 535. It's a 3% lender fee, and again, split like the weighted 2 to the lender, 1 to the broker, with some flexibility in there, a closed term with a 3-month interest prepayment penalty on it. So we kind of give that ability to now give a rate fee aspect a lot larger for the clients to say, hey, listen, what's going to best suit your situation? And the close we brought back, just the fact that we, again, with uncertain times of what's going on in the market, some of the consumers out there are wanting a little bit more stability and that lower rate aspect of it.
The one that sticks out to me is the no fee option with the Pathfinder. And to me, that's a pretty rare product in the private space. And you really dove deep into it and how, you have flexibility there. But why did you build the product that way? And I'm assuming there was a common request for something like that.
Obviously, the Pathfinder was established before, I joined the team. But for us, one thing we pride ourselves on is full transparency to our partners and then through to the consumer. What you see in our rate sheets is what the client gets. Outside of what I kind of mentioned, we have 4 bonus categories. So if a client falls within that, if they're needing to go into a corporation, you're going to add a 1/4 point to those rates. And that's what the clients are. You're never having to come to us and say, hey, can you quote me on this? As long as you've got the current rate sheet in front of you, you can have that conversation with your client upfront, knowing exactly what you're going to get from 3 Point. So it really takes that that anxiety out of it for the client, knowing that. So that's why we kind of provided those options, because not everybody's case or scenario is the same. Somebody may need a lower payment, so they may want to pay that upfront fee, or hey, I just need to get the deal done in short term. I don't care about the payment. So that gives that flexibility to not paying a fee on that. So again, just giving the clients options, and, way back when, and Brad can to say, we felt that was going to set us apart in the industry out there, offering that ability to the client to choose what best suits them.
I mean, it really empowers the broker's experience with the client to make it really fit what's best for the client in that moment, and rather than, hey, this is all you got, sign it, let's move forward, right? So I think that sets up for just a much more successful client experience overall. Hey everyone, Dean here. Quick timeout from the episode to share with you the ABW Tuesday Mortgage Memo, your weekly market highlights sent directly to your inbox every Tuesday. This is certainly one you're not going to want to miss, so make sure to sign up now. You can do so with a link in the show notes, or you can head to joinabw.ca and sign up there. This is a high-level summary of market developments, regulatory updates, and housing trends every Tuesday. So hope you enjoy it, and back to the show. The construction lending program, when I look at the construction space, we don't have many lenders doing it, let alone like the prime side. Even on the private side, we've seen a lot less of this, and it seems like one is falling off every year almost.
So we do offer single family construction. We've always done it in British Columbia. So our absolute max single family construction mortgage is 1.5 million. So some people are going to say that gets me nowhere in West Van. Great. I don't want to be on that house anyway. Right. But what it does do is it keeps us into marketable properties for a specific reason. So a spec builder, they don't exist anymore. And I'd be afraid to go into a spec right now anyway. So I would say we're very fussy. So we do go up to max 65% of end value. So let's assume the builder or / client's done their budgets properly, give or take. That's going to be 75 to 80% of cost. So there's usually about a 10% flex in there, maybe 12, depending on the builder. Full new home warranty required. We do not do owner builds. Sorry. Don't want anything to do with them. Just our choice. But we have a really good draw program behind the scenes. We have certain brokers that we have done literally 10s, 20s, like number of files we have done for certain brokers. They just love our program. They know that the draws happen. We get an inspection report, that draw is turned in 24 hours or less. So, for example, if we got an inspection report in at 9 a.m., I would suggest that draw is going out same day.
Wow. And would that be based on progress then? Like,
we do it on percentage complete.
Yeah.
Some could argue, Mr. Brad, you're the risk manager. Why would you do percentage complete versus cost to complete? We also want the builds to actually happen and be successful. So, we did try the model of sort of a hybrid between cost to complete and percentage complete. Still gets people into trouble. Like if you're dealing with good people, percentage complete can work. We also maintain limits within our portfolio that we don't advertise, but we can never go, or at least for me, sorry, I get to build our guidelines. So I get to cheat because I can actually manipulate our guidelines the way I want, as long as our external board agrees with me. But I try to keep our construction program to no more than 10% of our total mortgage fund. So, if we're at 270 million right now, or 280, I don't know where we're at today. You would think, but we're somewhere in there. I don't want to see any more than, say, 25, 26 million committed into our construction program. That's all about managing risk. That's what being a good risk manager is, because there has been some lenders, as you say, have exited our space, but they were also running 60, 70% of their book in construction. Well, when construction trips and falls, well, guess what's going to happen to you? You're probably not going to be in business any longer, right? So we're very fussy on where we do it. We want urban locations. We want to know what the exit is. And again, full new home warranty, detailed budgets, good builder, the whole meal deal. So we have recently expanded it into Ontario, thanks to Justin beating me over the head with a hammer until I agreed to it out there. And so far, so good. We've actually have our first homes completed that we started. We only started this program in Ontario literally like 9 months ago. But the first two we did have already completed and paid out. So
Oh, cool.
learning about Ontario's process, right, with holdbacks and so forth. So, the brokers knew that going in, that they were the first deals in Ontario, and they explained to their clients that, hey, we may have a bump, we may trip, we may fall, but guess what? We're going to get up, figure it out. And thank goodness we did it with some very core brokers there that actually helped me understand the risk management side before we even dove into it. So I can't stress how important it is for us to have great broker relationships, because those brokers can help me learn about different products. They can help me learn about different communities, right? So
to that point about you being able to kind of look at guidelines and make tweaks and adjustments, how often do you guys look at competitors and look at what they're doing, or take broker feedback to find a niche that maybe isn't being served? Like, how often are you guys doing that analysis and perhaps implementing changes to a policy or looking at launching a new program or a new avenue?
almost a two-part question, Jason, for me at least. So we look at our actual hardcore lending guidelines once a year with our board. It always happens in January, because our lending guidelines have to form part of our offering memorandum to our investors. And our new offering memorandum always comes out in March. So from a pure structured lending guidelines, that happens in January every year. Now, those are very broad guidelines, right? Now, within that, we have a lot of room to manipulate and, move things around a little bit. So I would say the answer to part two is continuously would be my best response. Your question is timely, because we literally just launched this closed program, and we shifted our loan to value categories. We used to be sort of up to 50 and then 65, 70, 75. We decided to narrow it down to 3, right? This is all because of Loren and Justin on their continuous research. I'll use the term loosely, but keeping us up to date on what our competitors are doing, right? There's certain products that just don't fit us. Like, say, for example, a line of credit program or HELOC program, some mix are offering those. For us, it just doesn't work the way we run our accounting and our mortgage systems behind the scenes. So it's not as easy as just saying, hey, let's launch this program, right? It's got to fit, the whole team from top to bottom. So I would say we try to continuously watch our competitors, but I'm also not afraid to say I'll never be a leader in the race to the bottom when it comes to interest rates and everything else. I think it's ridiculous, because we all have investors to serve. So you got to learn to walk that line, right? Like, Loren and Justin, as keep pointing to them, but they're the ones that need to hound on me for certain things. But my greatest responsibility at the end of the day is still to our investors, right? And ensuring that we're protecting them, we're giving them a decent rate of return, and they want to continue to be investors in our mortgage fund, because without them, we'd be nothing. No MIC would be anything without their investor pool. So as I say, you'll never see me come out with some rate special at, oh, we'll do this at 499 and 1, or it says starting at, which I think is a load of shit. Sorry, crap. Sorry, he's getting into the area of stuff that drives me nuts. But, as Loren pointed out, our rates are our rates. We don't do any of this starting at, or, I think a big click word in our industry is bait and switch.
Yeah.
Drives me nuts. I think it's bad for the industry. I think the lenders that do it, it's just not good for the industry. It's not transparent for the consumers.
Yeah.
I mean, we're all charged with suitability. And I mean, I'm the principal broker. I mean, I don't want to step in front of FSRA and go and trying to explain suitability and why certain products and certain rates happen for certain borrowers when there's a complaint filed. So,
yeah, I couldn't agree more.
I mean, one thing, just kind of going back to, knowing what our competitors are doing, some of my best friends in the industry are my colleagues at other MICs. I try to get together with individuals or a group of them as much as I try to do with our broker partners, because, we're not going to do everything that everybody wants us to. And that's just nature of who 3 Point is. But it's always good to know who is doing things that we're not, because, I have no problem saying, Jason, hey, listen, this file's not going to fit, but go to this one. or go to that one. They may do that. So brokers out there need to realize that, we do talk to one another, right? We want to know what each other's doing so then we can best help our broker partners. Plain and simple. If I can't do it and I know somebody may be able to do it, I will happily refer it off. With a caveat, if I'm going to refer it off to, have to be somebody that I trust and that I personally would do business with. There are a lot of other lenders out there that I wouldn't send my worst enemy to. They can figure that out. But I think that's key to knowing, where we need to make some shifts. And obviously, like I mentioned, we've recently made some shifts. It's not out there to the broker community yet, but it's coming, and we're always trying to find ways to tweak what we want to do for our fund that will work for our broker partners.
Yeah, and I think that's a clear differentiator of what sets you apart is just, a broker can trust that you can be their first call. If it doesn't work, they're going to get some guidance on where it might work. And, maybe that's another segue here is just what makes a strong deal submission? Like a broker is packaging a deal for 3 Point Capital. What do you want to see in that package and how do you want it positioned?
First off, I want to see a full application. I don't want to start, throwing stones, but there are more and more deals coming in where we're seeing blank applications. So I kind of I say to brokers, like, go through each of the steps. I mean, submission platform, whomever you're using, use the tab feature and fill in that information. So it gives us the best picture of your client going forward so we can make a fair assessment. As I mentioned before, why are they coming to us? Have you talked to that? Maybe it's not fitting for X, Y, or Z, and then identify that and break it down into some easy, tangible, readable notes. Not looking for a book. And then we kind of build off of that. Hey, what kind of assets do they have? Do they have a portfolio that they can fall back on if it may be skinny? Are there other properties? What's income like? For us, we're not heavy on a doc for income wise. So we have to have a comfort that the client has that ability to make a payment and the suitability, Brad mentioned before. So I kind of walk through that with the broker so they know if we don't have that, they can't, identify it, then we'll simply pass on the file. Documents are documents. We're not heavy on them, but we rely on good quality information on that file and then kind of piece it together. Submission platform for us, typically you're going to submit it in via your favorite underwriting platform. And then once underwriting's how to boo at it, they'll send you a secured link. So you don't necessarily have to have all the documents up front with us. And then you can just drag and drop and get that in there. But I kind of go through what we're looking for as far as the notes to make sure that application is as clean as possible coming through.
And then like on the flip side, what are common mistakes broker makes when submitting private deals? Like you just mentioned an incomplete application, which blows me away. We've heard just some of the most ludicrous situations, like the notes are 80% loan to value, bro, was one of the comments on our podcast before. So like, what are some other things? Like, a big piece in private lending in the early days of my career was the exit strategy. And, we're looking at exit strategies nowadays being less of a reliance because some of these folks are, and probably a big reason why you have this Horizon product is they're going to need it for 2 years. And then the exit strategy might change from now till whenever they, need to exit. And, a big exit strategy in the past was they're going to sell it. Well, is that really a strong exit strategy now? So like, I know it's a loaded question and I kind of went off topic there with the exit strategy, but where are the holes that we're seeing and the common mistakes?
I would say detailed notes, not to hone in on the notes, but I liked your hey, bro, 80%. I think we had one, I don't even know if it was yesterday or Friday. It doesn't really matter. But basically, it just said purchase closing and whatever date it was, need 75%, please send commitment. That was the notes.
Yeah.
And this is a broker that hadn't reached out to Loren or Justin. And, like, dude, like, what are you even thinking? Good sales job on trying to get your deal approved. Right. Totally agree with you on the exit side, though, Dean. I mean, even 5 years ago, 6 years ago, sale was an easy exit, right? Stuff was selling in a day or two. I think the key for us on exit now, even though there is no perfect answer, at least have a plan.
Yeah.
Having a private mortgage long term is not a plan, right? As much as we opened a closed program, I'm not thrilled with it because we rely on turnover in managing an MIC, right? I mean, we turn over about 70% of our book annually.
Wow.
And that's a big number, right? To me, it's just having a plan. If it's because your client's beacon score is 570 and they need to be 650 to get with whoever on the B side, sorry, I don't know all the B lenders, but I mean, have a plan to help them get there, get them to that B side, right?
And that goes back to the notes and packaging the file. Like one of the big things I say is like, if it's coming to us for a short term to get it to that next hurdle, like Brad said, the credit up to 650 or 670 or whatever to fit at somebody else's program, let us know that you've had that conversation with the home trust or whomever it may be. And there's like, hey, we've got an approval in place and here's the commitment. We just need to hit these 2 boxes with you. It's going to probably be 4 months when we do that. And then you're taken out. That goes a long way in our adjudication program because to everybody's comment, I mean, simply a sale, I mean, that's such a common answer I get from brokers. Well, they'll just sell it if it doesn't work out. I'm like, listen, this market, a sale is not going to be an answer, right?
Yeah.
Legal action's not a good exit strategy. So,
yeah.
Yeah. And like, if a deal is borderline, what does an escalation process look like? Like, Brad, do you have your eyes on every deal? Yeah. So then the escalation is already there. It's with you.
Tanya Russo is our manager of underwriting. I don't underwrite as much or nearly anything anymore like I used to, at least. We have just an amazing underwriting team, but Tanya and I both maintain the total limits for our mortgage fund, right? But there isn't a deal that comes in that I don't at least look at in some way, shape, or form. I get email notifications every time a new one pops into the system. If I'm available, I'll go have a quick look in case Tanya or Laura have a question for me about it. So, but I would suggest I am on the approval of 99.9% of every mortgage that goes through our fund. So
this would probably be a pet peeve more for Derek, who's not on the episode today, but I definitely see this as well. And, we talked about calling first to discuss the scenario, maybe before submitting it and, prepping that package. But where our pet peeve comes in is, we get brokers on our side escalating to us saying, hey, like 3 Point's not doing this deal, or 3 Point's got, all these questions about this deal. It's like, my understanding is if you're coming back with questions, it means you probably want to do the deal. You're just trying to figure out how to do it and, get across the finish line. Maybe you can articulate like that whole process and how you feel about that.
The one thing that I have instilled in the underwriting team is there is no such thing as a slow no. If it's a no, we're going to tell you immediately. And I would suggest 99% of all mortgage brokers really appreciate how quick we get back to them, right? If it's a no, we're going to tell you no. We're going to tell you why. Maybe it's in a place we don't lend. Maybe it's, sorry, we don't go to 85% and so forth. But if we're asking questions, that means we're doing our best to try to put this together. And obviously, if we're asking questions, it means those answers weren't in the notes to begin with, right? There's a lot of stretching we do for our top brokers. That's the best way I can put it, right? Is, we had one yesterday. It was 75%, a little bit of an obscure location, a little bit of a house that we weren't thrilled with. But what we did is we quickly just took a step back. Is it marketable? And for me, it was the price point because it wasn't a big risk. We were talking about a property under $400,000, right? So I'll look at that way differently than a $2 million house. And you know what? We made that decision. That deal was approved in under 60 minutes, right? But to answer your question specifically, if we're asking a lot of questions, it's because we want to do the deal and those answers weren't in the notes. So
yeah, fair. Looking to wrap up here, and if we're kind of looking at trends, and let's say we're focusing on the private and MIC lending space right now, what are trends that you're seeing that are really sticking out to you?
Well, number one, business isn't as robust this year as it was last year, and that just speaks to the housing market. We can all read all the headlines. Houses aren't selling. So the trend we're seeing, and trust me, we do talk to a lot of our competitors. We're all friends behind the scenes, or a big group of us are, is weak applications. And this isn't a fault of the broker. It's just pointing to the consumers. There's a lot of consumers out there that are in a tough position. Right? They've got themselves either the job market isn't what it used to be. Tariffs are, clicking in. Now we have, outrageous gas prices. I mean, the list can go on from that side. But I would just say the weaker quality applications are way more prevalent this year than I've ever seen them. Like very poor credit, or, we had one yesterday. They were in foreclosure with both their first and second. Right. And just got laid off. Sorry. I mean, we never want to be the last chair in the game of musical chairs. So for us, this year is really going to be try to just hold on and ride this sort of small wave out. We have no big growth aspirations this year. We want to keep our book clean. We're still funding a lot of business. So that means that there is still good business out there. But we're okay if we don't grow this year, or if we only grow a little bit. It's, I would rather keep a clean book than put a whole bunch of business on that we're going to be chasing 6 months from now. So
absolutely couldn't agree more. And I mean, it kind of plays into what my perception of, trend of where I've seen the private lending space come in the last 3 years is private lending to me used to be seen as like a last resort. And I've definitely seen that perception changed. More brokers today I find are treating private as a legitimate tool, not a fallback.
Our whole industry, this isn't just 3Point, has become way more sophisticated in the past 5-6 years than it's ever been. Some brokers would argue that a lot of us are just acting no differently than B lenders, and why do they need all these docs and so forth. But we've also proven how important the MIC industry is to the Canadian housing market. I mean, there's literally tens of billions of dollars being funded by MICs across this country a year. But our systems have become way more sophisticated. And that's everybody. I mean, better underwriting controls, better risk management controls. Most of us are operating quite sophisticated credit facilities behind the scenes. So what the brokers don't see is we also have to answer to our bankers. And when you're running a 9-figure line of credit, when your banker phones and asks you a question, you answer it.
Yeah.
And so our industry has come a long way over the last decade in the quality of the lenders, the quality of the underwriting. And again, I'm speaking for everybody, not just 3Point. There is some absolutely amazing mix in this country that are running a wonderful business.
Yeah.
And, someday I want to grow up and be just like them.
Well, it seems like you're on your way to doing that, if not already there.
Well, we're trying, right? We're trying, Jason. And, as I said at the beginning, we're pretty proud of what we've done over the last, 9 years. So
do you see, and not just from the consumer level, but a lot more brokers that are actually diving into the mixed space and actually making that part of their business plan? Like I see a lot of brokers that were focused on strictly the A space have now kind of filtered into that B and private market just because from a competitive landscape and where the clients are going. Are you seeing a lot of newer brokers reaching out to you guys that you haven't heard from before?
yes, and a lot of that is coming from both Loren and Justin and their relationships and expanding relationships.
Yeah.
I will never name names or locations, but we have certain brokers/brokerages that, even our MIC, which is probably still on the bit of the more smaller, medium size. I mean, there's brokerages out there running, 20, 30, $40 million worth of business through us. And that's a single brokerage, right? Number one, they've learned how to find the deals. They've learned how to, risk manage those deals on their own. And they've learned to understand which mix do what. And that's a key is, you don't need 10 mix in your back pocket, but what you do need is maybe 3 that are just all slightly different and have slightly different appetites. And when you have your go-tos, I know like us, we'll service the hell out of you. If you're sending us a deal that we'll do, I mean, our team is back to you like instantly and so forth. So I would say that there is brokers out there that are extremely sophisticated in our space and are doing very well at it. So,
I mean, maybe that's where we'll close. I got some great advice. And Loren, maybe this question for yourself, for a broker who hasn't done a lot of private lending, and let's say maybe they're mostly in the prime or alt space, like what advice would you give them to start building this part of their business?
I just say to brokers, I said, listen, just because your A or your B says no, let's have a conversation of what that file looks like and where's the pain point for those lenders on that file. And let's see if there's a solution there that we can help you bridge that gap so you can get that yes from them. So no, always just say to your client, hey, listen, I'm sorry, the A or the B hasn't been able to do this file and there's no solution. Don't be scared. It's an easy avenue to look at within the industry. So don't always just, once that no comes in, let's move past it. Now, I will preface that not every file warrants or is suitable for this. Some files are just too tight and it doesn't make sense financially for the client. But I always say, listen, look to your A or your B declines, because I'm going to say probably 25-30% of those are doable in this space. So let's have that conversation. And especially most of those are probably clean, but they're, falling short. Some of the stuff that we're doing is a self-employed individual that may have been an employee. Now it's gone BSF and they don't quite make that product in that next space. So we'll do that short bridge between the two. A lot of sort of divorce situations where each party wants to move on, they want to buy, but on the background, things may not be settled, so it might not, fit an A or a B program right now. So that's where we're looking at one of the better fits for that type of scenario. So I always say to brokers, let's have these conversations of what's on your desk that's not getting done, because there's probably going to be one or two to kind of fit this space. And then once you've got that understanding on how we work, then it makes it easier to identify files coming in, especially when you're doing a prospect call. You might just, hey, I know that's not going to work, but 3 Point has a solution that would work for you.
Yeah, no, that's great advice. I think that's a great point to end off. I mean, you guys have been awesome. You've been great partners for our brokers, and we really appreciate you taking the time to come on today and share this knowledge, share the history of both your careers and 3 Point Capital. We'll make sure to include contact information in the show notes, but for anyone listening, 3pointcapital.ca. Everything you need to know or how to contact anyone will be there, but we'll be sure to leave Loren, Justin's contact as well in the notes, and Brad and the rest of the team. So thank you. I really appreciate it.
Yeah, thank you guys. Really appreciate everything. And of course, the partnership, you guys go above and beyond for us. And we couldn't be happier with you guys. And big thanks to you.
Thanks, guys.
Thanks, guys.
Thank you. Thank you for tuning in. If you found value in this show, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, and YouTube. Your support is incredibly appreciated. We also welcome your reviews and feedback, which are crucial in helping us deliver outstanding educational content. Feel free to share your thoughts. A 5-star review would be fantastic if you think we earned it. Now, a message about something that means a great deal to us and to everyone at A Better Way Mortgage Group. City Reach Care Society is our chosen charity partner for 2026. For over 20 years, City Reach has been serving thousands of vulnerable individuals, children, and families across Greater Vancouver. They call themselves the Hope Business. When you see what they do, you'll understand why. Through their Food for Families program, City Reach provides fresh, nutritious groceries to over 4,500 people every single month. They partner with 54 schools across Vancouver, Surrey, and the Tri-Cities to make sure kids have access to food, hygiene supplies, and the support they need to thrive. Every August, their back-to-school blast puts backpacks filled with school supplies into the hands of 1,000 children heading back to the classroom. Here's what makes your support go even further. Every single dollar donated to City Reach translates into $10 worth of food for families in need. You can learn more, donate, or sign up to volunteer at cityreach.org. That's CITYREACH.org. Once again, thank you for listening, and we'll see you on the next one.